Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Well, we've been talking about the market fall, the broader market that has also fallen sharply from the highs. And if we take a look at the mid and small cap funds, how they have seen or performed in terms of inflows in the last couple of months, those bar charts will come up for you on the screen as well. So if we look at the inflows in the month of May 2024, it was around, if we talk about just the small cap funds first up, it was around 2,700 crore rupees. It fell down from those levels. Again, it made a comeback, and in August it was around 3,200 crore rupees. Then it went to 3,071 crore rupees, slight ebbing that we saw in the month of September. And if we talk about the small cap funds now from these levels, there has been a consistent inflow that we are seeing, especially after July. If we talk about the July numbers, it was around 1,644 crore rupees. From those levels, it moved to levels of 3,054 crore rupees, and September was around 3,130 crore rupees. These are the mid caps that I'm talking about now. So the mid cap table should come up for you on the screen. So there has been a sharp jump in both the numbers from the month of July to August, and then September has seen steady flows. That was till September. But come October, we saw that sharp fall coming in from the highs as well. In October, Nifty Midcap Index, that was down around 6%. The Nifty Small Cap 100 Index was down around 5.5%. From the 52-week high levels, Nifty Mid Cap Index was down 8.8%. The Nifty Small Cap Index is down 6.7%. So big chunk of fall came in the month of October itself. And year to date, these two indices have done well. Both of them are up anywhere between 20 to 21%. Nifty Mid Cap is up 20.1. Nifty Small Cap Index is up around 21%. So this is how the mid cap and the small cap space has performed so far. But, you know, these were the darlings of the market in the start of 2024 and 2023 as well. We saw big inflows. There were questions whether the valuations are stretched or not, whether there are more opportunities available or not, and where will fund managers put their money if they're actually looking at investing in the small and the mid-cap space. So we'll discuss that with our experts today. And on that note, let's welcome Vivek Sharma, who's the Senior Fund Manager-Equities at PGIM India Mutual Fund, and also Kirtan, Shah, who's the founder and CEO at Credence Wealth. Gentlemen, good afternoon. Thank you so much for joining in. And you know, we are talking at a time where everywhere you look, the market has seen or given you some correction. But we just talk about broader markets. And let me start with you first up, Vivek. What do you make of the broader market fall? Are you seeing some more pain ahead? What's the outlook going forward?
Good afternoon, Sonal. Thanks for having me on your show. So as Sonal, you rightly pointed out, these were the darlings of the markets. And if you look at since the start of, let's say, FY24, the mid caps and small caps, both at the index level and stock level, they have seen a very strong run up. And this strong run up has led to certain excesses in certain pockets, not all, but certain pockets. And what we are seeing now is a correction in those pockets, and the correction is very severe in those pockets itself. We believe that stocks tend to mimic their fair value, and given the strong run up, there was some distortion between the fair values and the market prices, which is seeing a correction. I do not believe that this correction is over. Further correction cannot be ruled out, especially in those areas which were in bubble zone or where, you know, cyclically high earnings were seeing very high valuation. That is seeing some correction. But if I'm a long-term investor, I would not be worried at this point of time.
Okay, so you wouldn't be worried if you were a long-term investor. Kirtan, let me come to you first. What are you making of this big broader market fall, and how are you looking at it?
Sonal, thanks so much for having me on the show. I think the fall is not significant because, you know, 8% intra-year is not really big. Historically, we've had 10, 15, 20% intra-year falls, and these are normal markets. I think like Vivek also rightly said, mid-cap, small-cap has actually run up quite a bit. But it is because of the FII selling that the broader market, specifically the large cap, has seen excessive fall, but the mid-cap and the small-cap has not seen so much aggressively because of two reasons. Like you rightly pointed out, in September and the months prior, there has been a lot of cash inflow that it came in. And also, MS was sitting on cash for a very long time, specifically in the mid and the small space. So the amount or the extent of fall that we've really seen in mid and small is not as much as it really can, and hence probably there is definitely no ruling out that November may not be as good as probably October was for mid and small. But if you see, it's not just the FIIs. I think the numbers also have not really done a lot of justice in terms of results. And probably, which is why the EPS is also getting cut probably in the near term. And I don't really rule out probably a bad November, because along with a lot of macro data points that probably might have impact on the markets, the results season has not really been great as well.
Oh yes, there have been a number of reasons, and November is going to be very, very busy in terms of a lot of macro events, as Kirtan just pointed out. Let me come to you, Vivek, because when we talk about the big rally that we already saw in the mid-cap and the small-cap space, how do you look at the valuations? How are they comparing with the historical average? Are we still at stressed valuations?
So yes, at an index level, if you see, we are trading about 10 to 15% above the long-term averages. And if we dissect where is this 10% or 15% increase is stemming from, it is stemming from companies that are trading away from their fair values, and we find valuation stretched in those pockets. Are all mid caps expensive? Answer is no. There is only a certain portion of the market or in mid caps and small caps that is trading at very high valuations, which is pulling the index level average. So I do not find the whole mid cap and small cap space overvalued. It is only the certain pockets where we feel that a lot of narratives and euphoria is being built in numbers and in valuations, which may or may not fructify.
Oh, okay. And that's where we saw a lot of investor interest coming in as well, right? If one theme was working, everything was working, then we saw a lot of push coming in terms of NFOs as well in those particular themes. Kirtan, coming on this, some numbers, if we can compare it with the average valuations that we've seen previously?
I think at the broader level, the large caps are very much close to their long-term average. 12-month forward is at 20.7 versus the long-term average of 20.5. So on the large cap space, this is very close to where the long period averages have been. But mid cap, small caps at the broader index level look quite expensive. If you look at mid caps, they've been trailing at 42.9 currently versus their long-term average at 27.4. And similar is the case with small cap, which is trailing at 32 versus the long-term average of 29.4. But like Vivek rightly said, probably this is an average, and then there are some pockets which are extremely highly valued, and when there are some which is fair. So it'll be wrong to measure everything with the same bar. But I think mid cap, small cap, in certain pockets, definitely you probably might see some more correction.
Okay, so there could be some more correction in some select pockets. So let's take this point forward. Now that we have said there are only some pockets which are seeing stretched valuations, there could be some pockets which will have reasonable valuations or growth opportunities as well. So Vivek, are you seeing some pockets where there could be some relief and some room for gains, and something that PGIM as an AMC is looking at and maybe investing or looking for a little bit more correction so that we can put in some money there?
So Sonal, yes, there are enough sectors and companies that are available even in the mid cap and small cap space today that offer good long-term growth potential. Talking specifically, we see financials, especially the private sector lenders, healthcare, communications, IT. These are certain sectors wherein we see reasonable growth for the medium to long term. And here, these segments, we are not overpaying for the growth. At this point of time, if we overpay for growth and if the growth doesn't materialize, you will probably see a double whammy of earnings getting cut and a multiple degrading. Since you are not overpaying for the growth in these sectors, I think these are segments which offer a very structural growth stories, and valuations are not very excessive when compared to other peers or other broader markets. So these are sectors we would be positive on. In terms of micro sectors, we can talk about EMS companies, hospitals, private sector lenders, retail and consumption oriented themes, which offer a very good structural long-term growth story, which we can play the India theme, where we see that there are still room for gains if I were a medium to long-term investor.
Okay, so these are some of the spaces, and financials and healthcare are something that there's been a unanimous view, right? From here on, at least the banking space could see some more gains because it has not done so much so far. Kirtan, you agree with Vivek? You have some addition to it, some of the spaces where you think there are reasonable valuations and something that AMCs can look at tapping as well?
I think 100%. I think private banks are a consensus view across. Pharma, another one. I think we were also very constructive on IT, and we see a lot of space in chemicals also. While the results have not been supporting, but I think there is a lot of tailwind in chemicals at this point in time, and valuations look very decent in the overall macro picture that we are currently standing at, where probably valuations may be able to support sectors or stock prices. I think chemical is something that can be added over and above to what Vivek Vivek just mentioned.
And just going by the numbers and at least the management commentary, they suggest that the second half could be a little bit better than what they had anticipated earlier. So, of course, we'll see things happening as they do, but a lot of tailwinds in the chemical space. Gentlemen, a very interesting chat, but we have to take a quick break. On the other side, we'll continue our discussion with Vivek Sharma and Kirtan Shah, discussing everything about small and mid-cap funds and what's the road ahead here. Stay tuned for that. Welcome back. You're still tuned into MF Corner. We still have with us Vivek Sharma of PGIM Mutual Fund and Kirtan Shah of Credence Wealth Advisors. We're discussing everything, what's happening in the small and the mid-cap space and what happens to the small cap and mid-cap funds going forward. Vivek, let me come to you. Of course, we saw a lot of run-up in mid and small caps. We saw that in the market in general. Just wanted to understand what is the kind of cash that you are sitting on in the mid and small caps or generally overall in the portfolio?
So, Sonal, we as a house do not believe in taking aggressive cash calls in our funds. We believe that when an investor has given us money to invest in equities, it is our job to invest in that. Cash calls are best taken by the investor or the advisor himself. So we generally don't keep too much cash. Our average cash levels across schemes would be 2 to 4%. If I were to keep 10 or 20% cash, I would rather prefer the investor take out that 10-20% and invest again when the timing on the market is right. We don't take aggressive cash calls in our schemes.
Okay, no aggressive cash calls. The general cash levels, as you pointed out earlier, between 2 to 4%, but of course, no aggressive cash calls taken by the AMC. Kirtan, let me come to you. If you can elaborate on that, if an investor were to start the mutual fund journey today, somebody who's entered the markets, would you advise them to look at mid and small cap funds? How would you advise them to allocate their money to different portfolios or different styles when it comes to investing?
I think, Sonal, that will completely depend on what's the objective of the client who's coming in. Because if the objective is to be able to replicate the 30-40% kind of returns that mid and small caps have made over the last 2-3 years or 4 years, then my sincere suggestion is that that's a very wrong expectation to start your investment with. And it's not a linear return like an FD would typically make, that the investor would make depending on the returns that were made in the past. So definitely, if the objective is to be able to replicate the kind of crazy returns that markets have made over the 2-4 years, I would rather suggest not to come in because that expectation is way off the table. But I think if the investor has a slightly long-term view, and when I say long-term, I mean 7-8 years, because that's what I typically look at before allocating mid-cap and small caps to the portfolio, then this or any other time can always be a good time. You currently can stagger your investments in mid and small over the next 6-12 months using STPs, right? So invest first in liquid and then systematically transfer that money over to mid and small over the next 6-12 months, provided you have a 7-8 year investment horizon to stay invested. I think once you do that, you probably are not really timing the market. You are giving the market enough time to average over the next 6-12 months, and all of that money is not going as lump sum at today market valuations. I think this is the best strategy for anybody who's looking at doing long-term investments. Stagger it today instead of doing it lump sum. And I have always firmly believed that if you got over 5-8 years of investment horizon, the best way to invest is equally spread your investments across large, mid, small, and also try and add value, momentum, and growth, all three styles of investing when you are building this portfolio. Because with just 4 or 5 funds, you will typically be able to bring all of these elements that I spoke to you of in that portfolio, which is the perfect diversification and will probably help you generate better risk-adjusted return over time.
Okay, so that is what they call asset allocation, right? You have to diversify. You have to have patience, of course, and it has to be according to your risk-taking capabilities. Very beautifully explained, Kirtan. Thank you for that. Vivek, let me come to you. How do you go about advising investors when it comes to investing, say, in mid-cap and small-cap funds? And there are new investors who are coming to the market every month, right? What should their portfolio strategy be?
So, if somebody who is new to investing today and he is coming to the markets or the mutual fund space thinking that he will generate similar kind of returns what we saw in, let's say, last 1 year or let's say in the post-COVID era, I would first tone down his or her expectations from the return expectations, especially at the index level, if somebody had a longer medium to shorter term view. However, as Ketan highlighted, when you are investing in mutual funds, you should have a healthy mix, a good asset allocation. One should invest across all market caps, probably across all strategies as well, and but with a longer term view. Equities is one asset class wherein volatility is very high in the short term, but if you increase your investment horizon, the volatility reduces and your returns increase. So that is the mantra of investing in mutual funds. You invest for the long term, you invest regularly, and if one can do that, one can generate significant wealth even in the mutual fund space over a reasonable amount of time. One should, at this point of time, also avoid from unwarranted euphoria and narrative-based investments. Probably that is one pocket that can see a good amount of correction or deep cuts is possible there. So invest in good funds which have a good investment philosophy, investing in good companies backed by able managements, good capital allocation track record. So these are basics of investing one should do, and apart from that, obviously asset allocation helps.
Yes, asset allocation does. And I do have some questions on that in just a bit to you, Vivek, as well. There's Multicap Asset Fund that you manage as well. So I just want to understand more from a strategy perspective for any investor there. But Kirtan, coming to you, what are some of the funds you would suggest from the mid and small cap space for any investor who's starting now?
Sonal, this is not an investment advice, but some funds that we've been tracking, and we like the way the fund manager sticks to the objective and how they've been consistent in terms of their performance over the last 3-5 years that we've been tracking them. So in the mid-cap space, we like the Kotak Emerging and the Edelweiss Mid-Cap. And in the small cap space, we like the Tata Small Cap and the Canara Small Cap. These are some 2-3 funds that we've been tracking for the last 3-4 years. And we feel comfortable with the way the fund manager is allocating the capital and sticking to the objective of the fund.
Okay, take that point. Vivek, let me come back to you now. So since we spoke about small cap and mid caps, and both of you spoke about asset allocation and how we should have a diversified portfolio, you do look at the multi-cap space or the multi-cap funds in PGIM as well. Tell us, how can one go about the multi-cap investing? Because that is one thing everyone looked at when there were changes in debt space, then there were changes in this budget as well in terms of taxes. Is this the way one can start? Just start with a multi-cap fund? What are some of the benefits or some of the risks associated with this?
Only you rightly pointed out, this is a fantastic product for anyone who does not want to do asset allocation himself, and the fund manager does it for the investor. So this is a product wherein 25% minimum is kept in all asset classes, which is a good starting point. And based on the kind of opportunities available, the top-down view on each capitalization bucket, he changes his or their allocation. So this is one category wherein if somebody is very confused or does not, if there are so many products available in the market in terms of capitalization funds, thematic funds, strategy funds, this is one product which one can have in their portfolio and be done with it. It invests in all asset classes. Minimum 25% will always be maintained. And at this point of time, we are having a very large bias towards the large caps. One, because there we see the potential of a downside participation is on the lesser side. We find large caps today are probably more attractively valued on a broad brush basis versus the mid cap and small caps. So today we are fairly biased towards the the large cap space. At appropriate time, we'll obviously take a call for the mid cap and small cap space as well. But today, as we stand, the capitalization allocation would be roughly 43 or 44% for the large cap and 26% each in the mid and small cap space. That is the current scenario in the multi-cap fund that we run.
Oh, that makes sense, and that explains the kind of moves that we've been seeing in the market so far. Kirtan, your take on this? An investor should start with a multi-cap fund, or do you think how you suggested, equivalent number put in each large cap, small cap, or mid caps?
Absolutely, Sonal. I think I've always been a great fan of investing across market caps, and multi-cap in that sense solves that purpose with 25 in large, 25 in mid, and 25 in small. Another 25 made available to the fund manager to decide what part of the market cap does she feel that there is value and does she want to allocate. So multi-cap in that sense is great. The only thing that I would like to add here is that while you are investing in multi-cap alone may not solve your entire problem, because ultimately multi-cap funds may turn out to be more like a mid-cap fund on a risk-adjusted return basis. And also you might not want to put everything that you have in one multi-cap fund in one AMC, because then you might not get style diversification. So multi-cap is a brilliant fund. Try and make sure that you have 2 or 3 multi-cap funds across AMCs so that you have the style diversification also taken care of. And also understand that this largely is going to give you a mid-cap risk return experience when you invest. So that should fit into your risk parameters basis which you should allocate it.
Okay, that point is well taken. And gentlemen, thank you so much for joining us today. It's been very interesting having this conversation with you, especially at a time, right, when there's so much noise around what would happen with mid caps and small caps going ahead. But as both of you have pointed out, there's nothing to worry. We had stressed valuations, so there is some correction that we are seeing. But from a long-term perspective, if somebody has to look at the space, it is good to go. There are pockets which will continue to do well as long as it's good quality. So thank you so much for joining in today.
Thank you, Sonal. Thank you for having us on the show.
Okay, all right. On that note, we'll do one thing. We'll take your leave on this edition of MF Corner, but you do stay tuned. There's a lot lined up. Closing bell comes up next.